Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. We're talking McDonald's. It's up about 3% over the last 12 months. It's been a really choppy trade here. You guys have seen any data that's reflective of the weakness in the stock and underperformance? Because, you know, some of these restaurant chains, Yum Brands the other day spiked on earnings. EAT, which is Chili's, that stock basically just hit all-time highs, just pulled back a couple days. But if you look at CMG, maybe Shake Shack and some of the others, is McDonald's really that much worse than those? Or what kind of data do you have?
Yeah, I know it feels like a bit of deja vu as I prepped these notes for McDonald's after talking about Yum earlier this week, because, you know, previously there wasn't a big move in the stock over the last year, a bit choppy as you mentioned, but we see a bit of two different stories emerging whenever you look at a McDonald's versus a Yum, partially because when we see McDonald's, we see a bit of a loss of momentum, especially when it comes to web visits. That's a little bit concerning, just an overall brand interest. Some of that, I think, was dinged by its E. coli experience. So I think that kind of dinged sentiment for McDonald's and kind of broke a little bit of trust with the consumer, and that's an issue that we didn't necessarily see out of Yums. We see some overperformance when it comes to Taco Bell. Then I think whenever you consider its value proposition, so Taco Bell did a really good job of leveraging its Lux Crave Box, its value offerings, and McDonald's did take a step in that direction. It's got its $5 meal deal, it's got its McValue offerings, and we saw a significant surge in interest whenever it dropped some of those deals both on its app and just in general, the buy one, add another item for $1. And I think that the reason that this is really important is because it's really important that the company win back a lot of those consumers that said, wait a minute, when I go to McDonald's, I'm paying the same amount that I would pay to go sit down at a restaurant. And so, it's doing a good job of showing that value that, you can go and you can get a McDouble, you can get these items that are your traditional McDonald's favorites at a bit of a more affordable price. However, it doesn't necessarily have the newness that Taco Bell was leveraging, and it doesn't have that fresh and higher quality proposition that Taco Bell had. So a bit of a divergent story here. We don't quite see the consumer momentum behind McDonald's that we saw behind Taco Bell. However, we do see that interest in its value offerings.
You know, Megan, when I think of the comparisons between Yum Brands and Taco Bell, what I really think about is the business model, which is franchises, which smooths out some of the volatility in the revenues and in the performance. Then you read that despite thinking that there can't be any more McDonald's in the world, their goal is to get to 50,000 restaurants by 2027. That's a massive expansion in a company that I cannot imagine any more in my neighborhood than there already are, Megan. And by the way, make no mistake, when everyone's talking about high food prices, McDonald's is still the low price point for all fast food. So they've got that going. And there's risks, right? Weight loss drugs are a risk. Protests are a risk. There's several things that are a risk. But this business model of franchisees, much like Yum that took off after their earnings, takes some of that volatility out, doesn't it?
Yeah, I think that that's a really good point. And I think another thing that McDonald's has done really well is leverage its app. Whenever you look at the top performing apps in the App Store right now, McDonald's is number 2. It trails only DoorDash, which is really impressive as a single entity. And it's one step above Taco Bell. So, whenever you think about this, you say, okay, McDonald's is still clearly the leader here and the resounding leader when it comes to footprint, when it comes to just brand value. You think about what you think of when you think of fast food, you think of McDonald's. But for us, when we look at this, we just see a bit less momentum comparatively. We've seen Taco Bell and Yum at large do a better job kind of starting to close that gap. But certainly McDonald's is still the leader here. And I think it's really important that we do see a bit of traction, and especially its value offerings, that it's regaining some of those consumers that maybe it had alienated whenever you think about 6 months ago. So nice to see some traction there, but we're not sure if that gets it over the new, high expectations bar, especially after this nice film report.
Yeah, 150 million active members. They expect 250 million by 2027 as far as the loyalty app that they're using. But Megan, when you look at this, they had the E. coli outbreak that, kind of dented the shares a little bit here. But at the same time, if the consumer's still out there spending, we got some wage data this morning with the jobs number. People are still employed, 4% unemployment, wages are going up. Is McDonald's one of those franchises that you guys track that does well when the economy is doing well and does well when it doesn't, because it's the cheapest, as Kevin mentioned, the cheapest price entry point for a lot, for food?
Yeah, I think that that's certainly a catalyst, but when the consumer feels like they can spend a little bit more on going out and running through the drive-thru and picking up dinner maybe on their way home. For us, when we look at this report, we're heading in with a neutral outlook. But I do think, we have a little bit of history now. We saw how the market responded to Yum's report, and we do think that McDonald's is a leader in this space. We have some positive app data, but we also have a bit of uncertainty heading into this report because we don't know exactly how much that E. coli outbreak impacted its sales just this quarter. I think if you look at from a guidance perspective, we're starting to see some improvements, especially in the last month. So that's positive. So it really comes down to what you think will matter more to investors, and if McDonald's can clear that bar, I think you could make a cautiously bullish take. But for us, our score is technically in the neutral category.
Neutral category here for McDonald's, up by basically about 3% over the last year. All right, great stuff as always, Megan. Appreciate it. Have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at LikeFolio, joining us, breaking down data on McDonald's.